Right, today is November 17th, 3 p.m. Mr. Alan Hansen asks, what does your general position size look like for your SPX trades? So I typically use a max size of about $8,000. Um, I very rarely will go full position, right? I'll very rarely use my full allocation at once unless my risk to reward for the entry is top tier, meaning I'm only risking say 5 to 10 points max. Now, if I know that we can head lower, yet there's nothing wrong with the position, I may elect to start the position a little bit lighter so that I have room to add in if that dip is offered, right? So I do believe that you should have a max sizing. Um, Now, that might be whatever you're comfortable with. I think 10% of your account is what a lot of people like to say, but if you're trading same day SPX contracts and you're using 10% of your account, that can go south really quickly, right? So typically you want to use as little as possible, but of course on the same token you need the amount of capital at least to afford two contracts, right? To be able to be able to have that scalability on the play. Um so let's say you choose 5%, so you need to be able to afford minimum two contracts that fits within your max risk. So again, SPX is very aggressive. It's a scary position to trade. If you guys like, I've recommended many times, you can always substitute SPY in place of my SPX alerts. Okay? A lot of people don't realize, but percentage wise, they will do very, very similar returns. Is that what you're primarily asking, Alan? I see you're unmuted. You can just talk to me, man.
Can you hear me?
Yeah, I can hear you, man. What's up?
So what's your your first trim? What's that look like in term so say you got 8 grand on what are they normally $500-600 contracts, right?
Sure. It typically I usually have anywhere between like 10 and 15 contracts. I will say my first one or two trims is really just to kind of build a pillow. Um, because the bulk of the position is what you want to make the most money on, right? So what I'll do is say I have 10 contracts. You notice, right? When I take my trims, if we get a full play from start to finish, typically it's about 5 or 6 trims, right? Those first couple trims are very small, right? I'm maybe only reducing the position by like 10%. It's not until later in the position where we're up significantly that I'm taking off, if I say I started with 12 contracts. The first two trims I may only sell two at a time, right? Just to kind of build a pillow. The later trims I'll be selling 3, 4 at a time, right? Um, and that's typically how I approach all day trades is, the entry is always the highest risk, right? But once the position's moving in your favor, you want the bulk of the position to be the one kind of making you the most money, right? So when I enter a position, that's kind of when we're just feeling it out. We're if it goes green on us, if it pops, sure we'll lock some in just to kind of build a pillow, but it might not necessarily be the winner we envision it to be yet. You know what I mean? Like I don't enter SPX because I think I can make 20%, right? I enter SPX because I think there's a sizable move that can, pay these contracts 100, 150%, right? But you can always take profits at 20, 30%, and nothing's wrong with that. And in fact, I encourage you do that because how annoying would it be to see a play go up 20, 30% and it's nowhere near your target, but at the same time, it fails and then goes red on you, right? That's never fun, and now you've let a green play go red. So I don't like to do that. I like to scale out of a position as it moves in our favor. And once I've taken enough profits that I'm comfortable, I'll always set my trail stops back at break even, right? So that's how I approach it. I think you want to scale out exponentially kind of as the chart moves in your favor. Um, Again, it's easier to manage with more contracts. More contracts gives you greater scalability, right? You can just scale out. You can take a trim every dollar higher, right? But if you only have two contracts or you only have one contract, you're forced to make a lot harder decisions when it comes to taking profits and exiting that position, right? If you only have one contract, you either have to just hold up all the way until your target, or you have to, just play conservative, very conservative. So the more contracts you have, the greater scalability you'll have in the position. So in a sense, yes, it's easier to make money with more money, but that's how I'll typically do it. So when I play spy, for example, it's a lot easier. When I play spy, those contracts are typically 120 bucks a piece, right? We played a spy play on a Friday where we caught longs. I started that position with, I believe, 35 contracts. And so that scaling out was a lot easier, right? I started only selling, two or three at a time. And by my last fills, I was selling, five or six at a time, right? Does that make sense, man?
Yeah, yeah. Thanks, man.
Yeah, for sure. What's up, Trash? You have a question, man?
Like, you use swim, right?
Yeah, that's what we're looking at right now.
Is it free? I'm not really sure how that works too well.
Completely free. Um, so it is still a brokerage. Um, I think for whatever reason, I've had a Thinkorswim account for a very long time. And you can see up here, I don't keep any money in Thinkorswim. None. I don't have a single dollar in Thinkorswim because I just use it for a charting platform. I execute my trades on Tasty Trade, but the only reason I don't use both is because Tasty Trade's charts are abominable. They're awful, right? I think that Thinkorswim is far and away the best charting platform. And I would pay for it. If they made you pay for it, I would. But I have never paid a penny to Thinkorswim. And I think back in like 2022, they told me, hey, fund your account, or we're going to close it. So I literally just put $1 in. Yeah, you can just do that. But it's completely free.
Thank you.
I think for real-time data though, they may have made some changes. To get real-time data, you might have to put some money in, a dollar. Literally just put $1 in, right? Like you don't need to trade on Thinkorswim to use the charting platform. All right. What's going on, Sean? What's going on in 2024? You guys got any questions for us?
Good, brother. How you doing? I'm just here to educate myself.
Sounds
Just
good.
listening.
All right. Well, just reminder, guys, these sessions are member led. So if you guys have a question, ask it. I'm sure the rest of the group would benefit from you guys asking as well, okay? Small turnout tonight, not that many people showing up. I think I should probably advertise these more, you know, send a notification out on Sunday, or maybe send a notification out on a Friday or something like that. Right. Well, if no one has anything, we can talk about the positions we took today, or we can talk about um let's see.
Do you want to talk about tomorrow's a little bit that you were thinking about?
Yeah, some of tomorrow's trades. Are you talking about my plan plays?
Yeah, yeah.
Yeah, so I will just kind of preface this. When volatility's high, as we're seeing right now, I don't I send those plan plays, don't get me wrong, those are the plays, those are the individual stock plays that I am the most confident in. Yes. However, those are merely suggestions or ideas for you guys, right? To kind of get a glimpse into kind of what I like to look for, what I want to see, etc., right? But I post those consistently, for one, just because I'm kind of known for it and it's consistent, right? But when volatility is high, I tend to want to focus exclusively on indexes. And the reason for that is, if you can figure out what ES is doing in the middle of these, what we call overwhelming market waves, right? ES was down what? 1 point, I don't know, 1.3, 1.4% today from high to low, right? So we came up, we had that pre-market high. Let's just figure it out real quick, just for the sake of the argument. So here's our high, here's our low. Wow, 2%. 2% from pre-market high to the low. So yeah, this is absolutely what we would call an overwhelming market wave, right? If ES is down 2% in a day, good luck finding any green names, right? It's so much easier to just look for downside, right? And vice versa. If market's up 2% in a day, good luck finding red names. It's easier to just play upside that day, right? So when volatility is low and ES is only moving, say, 0.3 or 0.2% any given day, there's not much overwhelming sentiment in either direction, right? Sure, you could say, oh, the market's green or the market's red today, but it's generally going to be a mixed bag across the entire market, right? You're going to have plenty of green names, you're going to have plenty of red. And the nicest part is individual tickers say they're moving off of some sort of catalyst like news or earnings or the sector itself is bearish or bullish, right? Those individual names are able to move so much more independently, free of those overwhelming market waves, right? So, easiest way to think about it and remember it is if VIX is high, which honestly, what we're at right now, 21 ish, 21 isn't that high, but it's high compared to what we've had for the year, if that makes sense. So, when VIX is high, you generally want to ignore individual stocks. You generally want to focus on what the indexes are doing, right? Because, like I just said, if the market's down 2%, good luck finding a green name, right? It's easier to just figure out what the indexes are doing, and therefore you can just, you know, there is a little bit of extra work you can do. Like, let's say, so and so had bad earnings, right? Let's just pick a random stock. Let's say Apple has bad earnings, right? If the market's down 2.5%, if you're still looking to short individual names, you of course want to focus on something that's already weak, right? That could be nice. But if Tesla just smacked earnings out of the water and they're ripping today, like Google did end up having a nice pivot today. However, Google just got great news. They killed their earnings report and Warren Buffett just bought, right? That's always a big positive. So sure, there could have been a good short trade on Google today, but it's not the name that you want to focus on shorting, okay? Right? Because it's got that positive sentiment behind it. But there are other names that probably gave you a really good short today with the general market weakness. But you always want to, at the base of it, have the indexes, okay? Um, but yeah, the way I think about it is if VIX is high, ignore individual stocks, figure out what the indexes are doing, because that's what everything else is going to do. When VIX is low, ignore the indexes and focus on individual stocks, right? Because first of all, indexes when volatility is low is brain rot action. It's so slow, it's very hard. More often than not, you're just fighting theta decay. Um, Whereas individual stocks, as we already said, they can move much more independently, right? If something has good news, you can expect it to capitalize on that good news, right? But that's generally how I kind of weather the waves, is focus on VIX, right? If volatility is high, indexes. Volatility is low, individuals, right? So with that being said, those planned plays for tomorrow, they're ideas for you guys. I'll be completely honest. I don't really plan on playing them. Make sense? If you want to still talk about why I like them individually, we can do that. But I just wanted to preface that with I don't necessarily plan on playing them. Do we still want to look at PLTR in Tesla? Hello, can you guys hear me?
Yeah, I hear you.
Okay. Do you guys still want to look at you guys still want to look at PLTR and Tesla?
But let's go with the today's trade.
You want to look at today's trades? Sure.
Yes, please.
All right. Hold my chart to load. Okay, so we took two trades today. One of them winner, one of them a loser. I don't regret either one. Okay, so we came into the day, right? We had gapped down, right? We know that 60 was our key level. Not only is it respected today, right? But it's been respected for the past few days. 60 has, I mean, look at the volume that's accumulated here at this area, right? We know that 60 is kind of our make or break spot, right? This is the spot that arguably I think 68.50 is where bulls need to reclaim to be in control, but very short term 67.60 is that spot. Okay. So on Friday we rejected lower, bought it back. 60 is where buyers of course showed up and where we tried to defend it into the close. And then in today, right, we made a new high, though it completely faded into the open. Buyers stepped in, immediately claimed 60. Okay. I'm gonna zoom in a little bit here. And so I had said in voice chat right off the bell, if anyone was in voice chat with us this morning, I said ES is only bullish today if we can reclaim 60, right? Buyers need to reclaim 60 for any chance of upside today. So the first play, we saw buyers step in immediately off the open. We claimed 60, defended it. And so we were thinking, all right, if we can dip back into 60 and defend it, we're looking to get long. So we dipped. I took my first entry on longs right here at 60. And I took another entry here at 48 for a full average, and it didn't work, right? We failed to get back over 60. And right after this candle, right after that reversal attempt that got absolutely shuttered at 60, that's when we decided, okay, this does not look good. We are holding value under 60, and it is being a clear ceiling. I do believe we are looking for lower, right? So if we look at the entry, let's look at what time I sent that out. So I stopped out at 7:39. 7:39 was this candle. After the bounce is when I stopped out of the calls, right? And again, maybe a little premature, but at this point my bias had flipped, right? And at 7:40, this is when we got short. Wasn't the best entry. I'll admit, was not the best. However, we still never even touched 60 again. On those shorts, we would have stopped out had we claimed 60. Had we claimed 60 and built value above it, we would have been out. That never happened, and we did sit through some drawdown. We took a pretty aggressive entry. I thought after this rejection and after this poor close here, I'm gonna be honest, I was fairly certain we were gonna see the breakdown this candle. It's not what happened though. Um, we took an aggressive entry and it bit us in the ass for the first 10 minutes of the play. We popped right back up into 60, and I think our contracts drew down. We paid 160 for them. I don't know if any of you guys took that short with me, but I think I saw the lowest the contracts hit was like 110. Did they go any lower than that? Was anyone in that with us watching those?
I think it was about the 110 area.
Yeah, so yeah, we definitely sat through some drawdown. It definitely wasn't fun, but we knew the area we were risking against, right? Should we have averaged in? That's debatable. If you were gonna average in, the spot that would have been likely, and I would have agreed with you, would be 60, right? Because if we reclaimed 60, we would have known we were wrong. Any added contracts at 60 would have been a negligible loss, right? So the only time it's warranted to average in is at the spot in which you are risking against, right? We didn't average in, and that's fine. I'll be honest, I was kind of on tilt. I wasn't really enjoying the session. We just decided to keep holding and just let the play out, right? We knew what we were risking against until that was broken or validated. There was no reason to get out, despite the entry not being great. Okay. Sure enough, we came back down. We got our break under this 40 area. We took some trims at low a day, and we ended up getting a little bit lower. We liked this 14 area, and we held there because if we look at, oh, I don't have volume profile set up like that. I got to change my volume profile because this is what we were looking at intraday. Change this real quick. Tick size, day. There you go. Bada boom, bada boom. So this is what we were watching. We had seen the previous day that the only shelf of volume from the previous session was tapered off right around here at the 714, 7. I was saying in chat, I was saying 713 to 715. couldn't have given you a crystal clear level, even if I wanted to. But we knew that the volume taper, and the way I look at that is I'm not even going to look at this pivot. We're going to look at the taper. So how I would have looked at it is right where that volume gets real thin is where I would have marked that off. So let's extend that out to the right and let's see how that lines up. Oh, didn't do it long enough. There you go. Right? So right at the edge of that volume taper where we had established value previously is where we got defended. We did squeeze it all the way back up, reclaimed 40, got 60, still could not sustain strength above 60. This was a quality short. Did I think it was going to go all the way to 60? Absolutely not. But was it a confident short at least down to 40? Yes. You could have very confidently shorted this for about 20 points here, left some runners for low a day, right? Did we catch it? No. In fact, I took a personal play on longs up here because I was watching this action and I was seeing that we were defending above 60, so I was thinking this was positive, but didn't end up working out. I actually closed this. I closed the longs before we sold. Thank God. I just kind of got bored. Didn't really love the action. I saw this kind of break down and save, and we failed to get above 60. I was long gone. I did not care to sit through the chop and IV crush, especially since we had just seen a fat rally of about what from 15 to 65. Yeah, we just saw a 50-point rally and action went flat. Even if you're still looking for higher, this 30 minutes of action will destroy contracts, right? So 30 minutes of flat action alone is already not fun. But on top of that, coming immediately after a 50-point rally, yeah, anyone holding calls through this period was in hell. And then getting this was probably just the icing on top, right? So we caught one good trade today. Um, I would say there were one, two, there were three quality plays today. There were three that you could have read before it happened. I'd say this short that we caught was readable. I'd even say this long was readable. This short, I'm not sure this was confident, the whole thing. You could have caught this down to 20, and this was a confident short if you were just saying, I'm risking against 60. I'm just playing the risk reward game. And then 60. This bounce into the end of the day was the third confident play. This you would have been chasing. It would have been a very aggressive play. Um, the reason I'm not saying this short was confident was only because of the short squeeze that took place previously, and the fact that we are holding value above where we had established value in the morning. So this, in my opinion, again, hindsight's 2020. But at the time, I remember feeling like this sell-off felt out of place. It felt almost out of nowhere. Again, nothing's out of nowhere, right? We're in a very fear-driven environment. We're not max bidding every dip or holding reversals as we normally do, right? Or as we've become accustomed to over the last 6 months. Okay. So that's the only reason I say this short wasn't the most confident. The three confident setups this morning that I can look back and say, yeah, you could have caught that were this short, this bounce, and this bounce. This short and this short. This one would have just been overly aggressive. I argue what you would have been chasing and kind of shorting it into no man's land. Whereas this, I feel like you could have only confidently caught it for about 10 or 20 points there. And you would have had to have played it like confirmation style. You couldn't have, if you're shorting up here with value being established above the morning balance, it just doesn't make a whole lot of sense. For at least how I trade. But okay. So those are the trades we took today. We caught two moves. One of them was a loss, one of them was a win. Even though our first trade was a loss, again, I wouldn't change it. It's still a play I would have taken. It was a bit early in the day for a confident read. Not to say I wasn't confident in the play, but we hadn't had any structure built yet. We were going exclusively off of what was established Friday. And over the weekend, things do change. So I would still take that entry again. But that short, I'm very glad we caught that. I do wish I'd stuck around a little bit longer because this would have been a really fun catch into the end of the day. I know Huji got it, but this was confident. 6,600 is huge. It's a massive level, right? Had it marked off for a long time. It was the major pivot low from what is that? From last week. It's just under the low from Friday. This 6,600 bounce was very, very playable. All right. So those are the plays we took today. Does anyone have any questions regarding either of those? Or why I say one play isn't confident and one is? Anything? Any questions on what we just talked about, guys?
Wax, I was just wondering, where do you get your levels from?
So I'm a very, very, very. Are you talking about the big levels we have right here or just in general?
I guess kind of both, if you could explain if you have the time.
Yeah, yeah, of course. So I'll just lay this out. I'm a very technical trader. If people ask me how I find plays, um, I'll over summarize a lot of the time and I'll say volume profile, price action, and common sense. Okay. Those are the three things that, regardless of market environment, they don't change, right? They might be a little bit faster, or they might be a little bit more aggressive, or even slower. Price action shows you real time decision making. It shows you where people are willing to do business, right? It shows you what they're doing right then and there. Okay. So, price action is something that, regardless of market environment, if you can read a chart, you can figure out something, right? You can reason your way through a position or into some sort of entry. It's not always going to be quality, right? We've seen choppy action, and of course, news can void price action, right? If you've got some sort of great trend, you're buying dips, you're consolidating, you've got respected levels, news can obviously change that, right? If Trump's tweets, "Hey, we're going to war with Mexico," yeah, your support's probably going to get broken. So, um, it's nothing's 100% trading. But price action is something that I believe no matter what, any market environment, if you can read a chart, if you can read price action, if you can understand where there's consolidation, accumulation, trending, anything like that, you can get a good read of how the market's acting and where you should want to be long and where you should want to be short. Okay. Um, volume profile. Volume profile shows you where the most volume has been done, right? It's a very simple indicator. It just stacks volume by price instead of by time. That shows you where people are most willing to do business and where there are gaps in bids, right? So if I'm looking at the chart right now, the first thing I notice is we have a pretty substantial gap, right, between two sessions here. I would argue between 6,700 and 6,720, there's a pretty significant gap in liquidity here. And what do you notice price has done each time we've moved through that range?
Flush.
Flush or buy. It's very quick, right? There's not a lot of decision making happening in here. Whereas when you look at something like this, if I look at the shelf here, what's happened in here? We got one clean move through. Everything else, a lot of chop, a lot of decision making, and if you pull it back even further, because this is still an area that was respected, right? If we pull off yesterday's action too, or Friday's action, look at that. It's a lot of choppy action, a lot of indecision, you know? But these liquidity gaps, right? These are very quick moves, right? And where do you see we're contesting right now? Right? We're contesting the bottom of that area. This is where sellers are trying to defend, right? They want to keep price within a fair valuation, right? We established this. This is where value has been established. This is where people like to do business. If you get above this area, there's not a lot of sitting bids in this spot. There's no one spot where sellers can outnumber buyers confidently and put a top in. And the same goes for on the way down as well, right? On the way down, very little value has been established here, very little business has been done. There's no one spot where buyers can confidently outnumber sellers on the way down, right? So, sure, were there people trying to long 6710? Were there people trying to long '06? Absolutely. But guess what? If there's more sellers than buyers, price goes down, right? If you set a buy order and it gets filled, price can come lower. Okay. So that's why you get these really easy pushes through these empty liquidity spaces, right? Um, Again, I'm kind of just over summarizing price action, volume profile, common sense, right? Common sense is, hey, market's trending lower. We should be looking to short pops, right? If we're in consolidation, you should be playing the range game, right? Short the top, long the bottom until it fails, right? Don't consistently be looking for breakouts. This stock has earnings tonight. I'm probably not going to swing calls. Common sense, right? Don't you want to think with the crowd. You don't want to be the guy trying to think outside the box, right? Okay, so levels. A lot of my levels are going to come from volume profile, right? Unless an area is just getting an absurd amount of respect. So really like look at this 6850 level, right? The 6850 level, we came down, first time we tapped it, big reaction, right? Second time, big reaction. Immediately after that, I'm drawing off 6850, right? And the next day, I think we actually caught longs on this day. What was that? The third? We'll look back in a minute. But I'm pretty sure we caught this one after seeing that it had been respected this much, right? And then we break under. Obviously, it's a short. Where a seller's going to step back in? 6850, right? So areas that you see get massive reactions like that, you want to focus on that because that's one spot where on the way down, right? Let's say it's a short. Let's say it's a pivot or a support zone. It's an area in which sellers realized, okay, I've either made enough profit or I now want to be a buyer at this price. It's where everyone in the market made a decision, right? It's where it might not be everyone. Sure, some people chased the lows and got stopped out, but they're not the ones driving. They are not the masses. That point is where the masses decided, okay, this is a discount, right? Or oh, this is where we deem this undervalued, right? We see an opportunity here. Okay. So that area, you always want to mark that area, right? So when we're day trading, you hear me say, oh, we just made an impulsive low, right? Or we just made a blow off top or something like that. That's not me just calling out your price action 101 book, right? That's me saying this is a spot where we need to be mindful of for the rest of the session, right? So again, how I pick my levels, a lot of the time it's just going to come from volume profile, right? Kind of marking off those tapers on, large shelves. The other part is just watching where buyers and sellers are active the most. Like all this chop up here between 75 and like 95. I don't really care about any of that. There's nothing in here. Sure, value was established. Don't get me wrong. There is a shelf up here that we can look to use. Um, but as for like individual levels in here, there's nothing in here that makes me, think that price should stop or go at any given spot in this range. Okay. It's these areas where you see decisive action, right? These are the spots you want to have marked off. Okay. Um, some of these levels, I'm not gonna lie, levels can lose value over time, right? I'm sure you've noticed we've kind of, even though 60 was what we were looking at today, if you look bigger picture, it doesn't really feel like it's gotten a ton of respect, right? You kind of have to zoom in and look to see that it's kind of been that level. And here's a little secret that I didn't really learn till later on, and it's not that big. It's nothing groundbreaking, but I see a lot of people they'll post charts and they'll be like, "Yeah, I'm looking at 676 1.25." They've just got the most concrete, specific, arbitrary number. You know what I mean? That's not where the masses do business. People like psych numbers. I don't know why. People like round numbers. So if you're noticing, okay, you're looking at this action here, right? We dip under, it holds, right? You see some wicks under, but generally this is where we're holding. Same thing yesterday or Friday session. Some wicks under, right? A little wick under, but generally speaking, would you be more inclined to mark your level off at this first low at 53.5? And then you look at the previous day and the low is 45. And then this morning it didn't quite get there before it bounced 64. Are you more inclined to mark off the whole number, or are you going to try to pick one of those three random levels that we said? Which are you more likely to do? Come on, anyone. All right, I guess it's a lecture. Yeah, yeah, level. Well, you're more than likely to pick the psych level, right? I promise you, people who are, or not people, generally, the masses, they're not, they're not buying some, they're not trying to get something to the tick, right? You're looking for bigger picture accumulation, right? People are front loading it. People are front loading it above the level before it gets there, right? And then they'll scale in. Maybe they catch the bottom. People are buying the exact level. People are buying it below the level because they think it's a discount at that point, right? But generally, the decision making is happening at the whole level. Okay. I'm telling you, it's so much easier to just use whole numbers for your levels. Okay. And again, you might be looking at this and thinking, oh, that's a random one, 6606.06. Well, there's a reason for that. That is a part of my other system. That is the that is the 5% marker from all-time highs. It's the only reason that's there. Okay. That's it. It is a whole lot easier, and you will notice a lot more respect of your levels by just putting them at whole numbers. Makes it a lot easier to type out too.
Do you usually chart like the daily or what time frame?
That's a good question. Are you're generally talking about my plan plays, right?
Yeah,
So I
mostly.
always start bigger picture. And I've said this to, I think I've said this to the chat many times. A good chart, you should not have to draw a million indicators. You should not have to draw a million trend lines to make it look good, right? A good setup should pop out at you. So, let's look at PLTR again. This is not PLTR, right? So I look at PLTR and immediately I'm like, oh, here's a level, right? There's a lot of action being done at this 170 spot, right? A good setup should not take a million. When you guys see my plan plays, it's not, I don't have 10 indicators up and a bunch of trend lines drawn. It's just a couple levels most of the time, right? Maybe volume profiles in the back. But bigger picture, um, yes. Bigger picture, I'll start on the daily and then I'll work my way down, right? So the justification for a day trade, what I'm looking for, it's the only chart that I spend the whole market watching is ES, right? The general market. That's the only chart where I can rework a play or take multiple different plays on throughout the day, right? Because things are ever changing and my attention is constantly there. Whereas PLTR, I have a big picture thesis, right? It's a bigger picture play. Now we're looking to capture it and we're trying to pick and choose the day we think the move is coming. That's where things get complicated, but the play is all the same. So for PLTR, I said, hey, weakness under 170, right? We have seen this level act as a major support for numerous weeks now, and we've seen a massive blow off top following their earnings, okay? And we've fallen back into this 170 level. There's a lot of buyers off sides and they're all using 170 as a stop loss. If we break 170, we have lots of room lower, right? So the day we break under 170, I may take shorts. The justification for us for any position is there. But if I see it, dancing around and kind of doing its own thing, I'll either just wait for the next day get a new daily setup, new daily chart to look at, or I'll just chalk it, right? If it's not doing what I want it to do, we'll wait. There's plenty of stocks out there that are large caps and have great options volume that we can play as a substitute. But I'm not going to rework the play. Most of my planned plays, they all come from a bigger picture thesis, right? And again, we might not get the full move in one session. So on the, on the day trades, you'll see day trade idea, possible swing, right? So um, like they don't all have possible swing. In fact, PLTR I didn't put that on, but Tesla, for example, Tesla's possible swing, right? The move we're looking for may not be done in one day, right? But all I know is, yes, bigger picture, this is the setup I want to play. Is a break under 170. Could the bulk of the move happen in one day and we get a banger day trade? Absolutely. Is it likely it could wick down into 163, bounce back up, hit 168, then come lower and then hit it over the course of like 3 days? Yes. Most of my day trade ideas come from a bigger picture setup. So I always start on I always start on a daily time frame when I'm looking for charts and when I'm looking for plays. And then when the day of entry or the day I want to play it comes by, that's when I'll, fine tune, jump into a 15-minute, jump into a 5 minute, something like that. And that's just for execution. That's just so I can see the decision making happening at my given level or around the spot that I plan to take entry. So that's exactly what we did with ES today, right? Bigger picture. This morning was a little tricky because we did try the longs, but I did say, how many of you guys were in voice chat with us this morning right off the bell and heard me say ES needs to reclaim 60 to be bullish? Was anyone there with us this morning when we were talking about that?
Yeah, I was there. You said multiple times.
Yeah, so when we were in those calls, I stepped back and I said, okay, I need to zoom out and I need to realize VIX is defending above 20, check, and ES is failing to hold over 60, check. We should want to be short. And that was my kind of step back, realize, okay, hey, this play's not working out. I need to kill this bias. We're flipping sides to short. Okay. So what came from that was watching that kind of choppy action this morning that we got stuck in for about an hour. Um, while it felt like noise and while it felt annoying at the moment, it was still clear. That's the word I'm looking for. It was clear disapproval of that 160 level or that 60 area, right, on ES. I'll go back to the chart here so you guys can see what I'm talking about. But we had a bigger picture setup, right? We knew VIX was over 20, and we knew that bulls had to reclaim 60 to be confident or to work higher. Okay. In the middle of the session, we acknowledged that that was not happening, right? ES was failing to claim 60, and at the same time, VIX was still over 20. Hence, we switched to shorts, right? So we were on the smaller time frame. We were watching our decisions. We were watching price action, right? Because what is price action? Price action is real time decision making. We were seeing market participants were not willing to trade 60 or higher, right? And that was justification enough for us to want to be short, right? We paired it with another confluence, i.e., VIX, right? VIX gave us the go ahead, okay? And that's how we executed that short this morning. Does that answer your question, Mr. Trash, a little bit?
Yeah, thank you for taking the time. I really appreciate it.
Yeah, of course, man. Dude, there's got to be something else I can call you. This is going on YouTube on the recording, and I'm just gonna be calling one of my members trash.
I like the name. I don't know.
That's a cool name. You play any competitive games? I feel like that's a name I'd see on Call of Duty.
But here and there, to be honest.
Yeah,
Like, not so much in the past couple months.
gotcha. All right. Not interested in the new BO7.
I really know. I haven't even seen any videos of it, to be honest.
Yeah. Hey, short Activision. Oh wait, Activision just went private, I think. Well,
They knew you
anyways.
were coming.
All right. What's going on, Killer Jack? What's going on, Jen? Susio, how's you guys' night going? You guys got anything you want to ask about? Any general questions? What's going on, Breadman? Welcome in. Got about 15 minutes left. I know it's been mostly a lecture style session and we haven't gotten to cover everyone, but if you guys have general questions, again, I want to kind of reserve this session away from individual tickers and mostly just keep it limited to general questions if possible. Um, Jen, Killer Jack, Breadman, you guys have anything?
Yeah, you know what, Wax? I was gonna say, I know that you and I have talked about like how you use volume profile, but like, can you maybe go over it again as far as just like perspective of how you use it while you're trading?
Sure, sure. Yeah. So, do you want to use today as an example?
Yeah, for sure.
Yeah. Okay, so I were you in voice chat with us this morning?
I didn't get into like 11. I wasn't there early.
Are you Eastern or Pacific time?
Central.
Central. Oh, weird. Okay. So, um, I was refreshing everyone. I don't give a whole lot of credit to volume profile or VWAP very early in the session. And the reason for that is they are volume based indicators. And most of the volume, of course, comes during retail hours, right? So market open and beyond. So even though in pre market, right, if you look at the pre market action, most of your volume was right around here, right? This is where your shelf was in free market. And look at how tiny that shelf is now, right? This was your biggest shelf on the day coming into the day and during pre-market. So, I don't give a whole lot of credit to um pre-market action, and I typically like to wait about 30 minutes to an hour before giving that credit to the intraday point of control and VWAP, right? However, there was a very clean area that did develop. Okay. So after we had rejected high a day and we spent a lot of time here, right? Even though this is only about an hour of time, right? The volume that was done in that hour more than eclipses everything that happened in pre-market. Okay. So you had a shelf develop. In fact, we might even, I'm not even going to try it. My computer will explode. But I was going to say, if you're interested, um, Thinkorswim has a really cool tool called On Demand, and you can actually restart the day. So you can watch the trading day back over in real time, and you can speed it up by like 5 or 10x. So you don't have to, sit for an hour to get to that point again, right? But you could rewatch this action and rewatch the volume shelf develop. But what we did was we established a very, very clean shelf on the day that was right about here, right? This was the shelf that developed that was very, very big, right? Now, of course, it got a little skewed because this move above that built some value here, and we you can see this shelf, and there's a tiny little gap that was created between 52 and 55, 56-ish. But early in the day, there was one solid shelf here that was between 42 and 60. Okay. Um, and so something like that, where volume just gets really, really concentrated, 9 times out of 10, if you're using it just intraday, it's not going to offer much more than just scalps, but they're very confident scalps that offer very, very tight risk reward. Okay. So I had said that during this consolidation, if we had gotten through 60, it was very likely we were going to go see high a day again. And unfortunately, we just couldn't hold value over 60 at any point today. And I also said if we break under 42, low of day should be a given. Okay. And the reason for that, 42 was not a level that I had. I don't have 42 marked off. You could make the argument and say, oh, it's that pivot low from overnight. Sure. In fact, this is the first time I've even seen this. Um, I was fully concentrated on the shelf that we had developed. I had no clue that this was a low. It's interesting that I'm seeing this now. But We had a very, very clean shelf that was established. And if you ask some of our other members, such as Espresso trades futures and he's very in and out, he's very quick. He shorted this 60 spot. And again, 60 is a big level, but he's watching volume profile as well. And those are the type of opportunities that it's really going to offer you. And so when I say, if I told you, hey, when we're taking our trims down at 15, if I told you I shorted at 43, which is what we did, you're probably thinking, oh, hell yeah, good catch, right? But if I told you I shorted 43 and we're in the middle of a bounce and we're up at 56, you're like, damn, right? That's a that's a shit entry. um, but that's why I'm calling this an aggressive entry. The play worked out and we got the break under the liquidity shelf. But the reason I said this was an aggressive entry, even though, you're still 15 points off a low a day, your risk is 15 points higher, it's kind of 1 to 1. 1 to 1 is not good risk reward, by the way, but um, it's not as bad as it would have been made out to seem or how I made it sound this morning, right? If you were in voice chat with us, you heard me say, hey, that's what I get for taking such an aggressive entry, right? This shelf, again, the only way to see it, I can't change volume profile now. The only way you could really see how it looked this morning is by using that on demand feature. And I definitely recommend you do it. It's one of the many awesome tools that Thinkorswim offers. But you'll see the shelf was very defined and it was so like, we had seen price explore all the way to 26 already, and we had seen price explore all the way to 75. So we had a 50-point range already established on the session. But all the volume was concentrated between 20 points. So at that point in the day, you had very, very, very clean levels to risk against. Okay. Now we took a high risk entry, right? I was so confident we were going to break down. I shorted the bottom of the range. Thank God it worked out. But that could have been a nasty loss and I would have just had to stomach it, right? Because our stop would have had to have been all the way up at 60. But like I said, we had explored 50 points of price already on the session, but volume was clustered. It was just very concentrated, right? And so the bigger and more defined a shelf is, that's what's going to give you those really quality levels to risk against. And again, just because you short the top of a volume shelf doesn't mean it's going to work. It's just offering you a very good risk to reward spot to do so, right? And again, sometimes what I say may not make a whole lot of sense, but I'm speaking from experience, right? We had said if this breaks, right? If this breaks this 42 level, low a day is going to come. It's a given, right? We can expect it. And sure enough, we got low a day and then some. I also said if we broke over 60, we should see high a day, right? That one didn't happen, but this one did, right? So this is one of those instances where if you were long, say you were long off of 42, playing the risk reward game, right? You could have scalped it back and forth many times. But when it broke, it's a little dicey switching sides immediately after you close a position. It's not the most comfortable thing to do, but this is one of those instances where once you got that quality close outside of the shelf, you would have had a lot more confidence doing so, right? Because then you just shift your risk level back to that 42 area, right? Close back over, I'm stopped, right? That's what I'm risking against. I don't want to see us re-enter that balance from underneath. Does that make a little sense, Jen? Again, there's many different there's many different ways you can use it intraday. For example, like that liquidity gap, right?
Mhm.
So again, I'm happy with myself because I had called this out. Who here was in voice chat this morning and heard me say, if we break under this 13 to 15 area, we should see 700 very quickly. Anyone, please, someone tell me they were in voice chat with us this morning when I said that.
I do recall this. I do.
Yes, exactly. And why did I say that? I said that because we had a massive liquidity gap from yesterday. I said there's literally nothing there, right? There's no liquidity there. So, sure, the first time we hit it, 15 got respected, right? And we got a big old bounce. But once we broke it, straight flush, nearly the whole move in one candle, right? So, Jen, there's many different ways to use it. Um, Intraday, those were the two best examples today that you could have used it for.
Okay. Thank you.
Yeah. And I definitely recommend going. Do you have Thinkorswim? Are you on Thinkorswim or are you on?
Yeah.
Okay.
Yeah, I am.
Yeah. If you have some extra time today, check out that on demand feature.
Okay.
Yeah. And
I
you'll,
will.
yeah. And you'll
I've
see.
tried it a few times before and I never can really figure it out, but I'll play with it.
Oh, we could. I mean, we've got a few minutes left. Let's spend our last few minutes doing that because I think this is a really useful tool for everyone in here.
So,
I will say I trade on a laptop with a monitor. So this feature damn near crashes my computer every time, but it's worth it. Let's try it out. So what you want to do is you want to come up here and you want to just set your time frame to so so what's today? Today is the 17th.
yep.
Okay, so I guess the 17th isn't ready yet. It's got to like download. It'll be available tomorrow, I'm sure. But we can look at Friday just to show you how it works. November 14th, 7 a.m. And then let's go back to a 5 minute. All right, so here we are. Friday's action. It's buffering. Yeah, it's a bit slow. My laptop's not the fastest. Works great with real-time data, but anyways, yeah, you'll just set your date and time here, the day you want to look at.
Mhm.
It'll start going, it'll start moving, and then obviously it's gonna do it in real time for us. So you probably don't want to watch that. You'll probably want to speed it up. You just yeah, you just click this.
Right. Okay.
But yeah, it's
Yeah.
a great tool. You said you weren't able
Yeah.
to get it working. Was there an issue with it or
Well, just I mean, I'm just super not techy. So when I went up there, I mean, there's a million and one buttons in some of these systems. So I was like, I thought it was like your replay that they have in Robinhood, but I just never really got too deep into it.
gotcha. Okay. Well, if you guys ever have any questions managing the platform, Thinkorswim or Tasty Trade, do not hesitate to send me a DM or ask me any questions, okay? Definitely gotta know the platform you guys use, okay? All right,
Thanks,
so
Mike.
yeah. So I've got it running here. Let's see if we can hit the step forward tool. Yeah, so that skipped at 10 minutes. We're gonna actually change this time frame down. So we're just looking at, oh yeah, it buffered for me. Yeah, it barely runs. Thinkorswim has to be the only thing that's running on my computer if I want it to run. Since I'm live streaming on Discord and I've got Tasty Trade opened up in the background, it's not gonna happen for us. But I've used on demand a handful of times. It's very useful, right? Just like we were talking about how that kind of that volume shelf looked this morning and where we took our entry. Looking back at the day and how we kind of dispersed volume throughout the day in different areas, it's not as clean now looking back, but real time, the shelves that we had to deal with on the session were very clean, right? And they were offering very good areas to risk against at that moment in time. All right, I'm gonna shut off on demand before my computer explodes. All right, well, we are out of time. I know it was mostly lecture style today, so I'll give us. Does anyone have anything general before we wrap up, guys?
I just was trying to catch the tail end of it. That's all.
Yeah, no problem. Again, you guys, if you guys showed up late or you guys missed a session previously, all of these sessions are recorded and posted on our YouTube page. So you can always go back, watch them on your own speed, and you can always refer back to me with questions. Okay, guys? Again, thank you guys for showing up. I appreciate it. I hope you guys got something out of it, and it's motivating to keep doing these. So hope it was beneficial, and I hope you guys have a great rest of your night. and I look forward to seeing everyone back tomorrow.
Okay. Wax.
All right, you guys. You
Thank you,
guys have a
Max.
good night.
Have a good night.
Catch you guys tomorrow.